Hey, I want to talk today about the power of corrective waves. Elliott waves, one of the things about Elliott wave theory is that especially if you're new at it, I've been doing it for quite a while now, and I still find this to be true, is that it is difficult. A lot of times you get in situations where you're really not sure what's going on. You're not sure what you're seeing. Nothing looks like a chart pattern that could be counted with Elliott waves. And typically when that's the case, what I try to do is just move on. I try not to force something or whatever. But what I have also found is it is very helpful to identify corrective wave movements because corrective waves can tell you what's coming next. Now, and also you can go zoom in to a smaller time frame or zoom out to a bigger one. And that's the other thing I want to talk about real quick about the complexity of Elliott wave theory is the fact that it is like a never-ending set of like stacked circles, a circle within a circle within a circle within a circle. That it's here's a great illustration. If you've seen those digital art videos, I'm going to play one here, and let me speed it up. Okay, this will be about 30 seconds long because I sped it up, and this is called like a piece of pie in the ocean. But if you've seen these videos before, they're just so cool. It's like there's a pie that's an ocean, a beach, a girl sitting on there, and on her laptop, one of the keys is this other person's world, and in this one, there's a phone with a picture of the city, and in the city there's an apartment, in the apartment there's a guy, or there's a phone on the desk, and in that phone there's another little world where people are looking up at the moon, and on the moon there's a train, and in the train there's these biodomes, and in the biodome there's a girl with a phone, and on her phone is another world, and it just keeps going deeper and deeper. As a matter of fact, even to the point where this one right here starts over back at the beginning. And so that is a cool illustration of what we see in Elliott wave theory. And so like right now I'm on the daily on Bitcoin, and I'm not going to say that these are right. I'm just trying to put something on the screen, but let me try to be at least close to right. I'm not calling this what it is. I'm just saying this is an example. 1, 2, somewhere up there's 3, 4, 5. Oh no, the end is near. So if you zoom in, so we're on the daily. If we zoom in on, pick one. I'll pick this one right here. We're saying, this is 3, this is 2, and so if we zoom into the 4 hour in the same area, we can see here. I didn't change the color of my primary cycle is just kind of white, but then within there's a 1, 2, 3, 4, 5 wave pattern in there in the yellow. And then if we zoom in some more, let's go to the 30-minute. Let's see if we can get there. Okay, I had to go to the 1 hour. But inside there is a, 1, 2, I don't know, we'll go, it doesn't matter. This is an illustration. 3, 4, 5 of a smaller degree. And if we go inside there would be a smaller and a smaller and a smaller, and you get the point. Inside here, this wave 3 has a, I don't know, we'll call it 1, 2, 3, 4, 5 of a smaller degree, and we can just keep going in more and more. This even looks like a triangle right here. But so that's one of the things about Elliott waves and how they work. Now, I'm going to delete all that, and we're kind of back where we started. Now imagine you're looking at this and you don't know what to do. We can even do a playback to that. You're looking at this and you don't know what to do. One of the things I've found helpful is just to, in very, very gentle, without even trying to mark anything out, ask yourself if this is an aggressive move or a passive move. And a good way to do that, I think it was Jeffrey Kennedy that talked about this, is to, somewhere in here, kind of where the turn happens or whatever, put a circle and treat it like a clock. And if that clock, let me put some crosshairs in it, somewhere around the middle. Yeah, so now we've got 12, 3, 6, and 9. And in that, what you could look at is where the price is moving. If price is sharp, it tends to be impulsive. If price is weaker, it tends to be corrective. Let me show you this by itself before I show you the example on the chart. So you got a circle. You got some crosshairs. 12, 3, 6, 9. If price, if it's a bullish impulse, tends to be sharp. If it's a bearish impulse, it tends to be sharp. Kind of in this 1 to 130 range, right? So you end up with this kind of pie chart looking thing. And the same thing to the downside. You know, if you're in this area, you're probably, I guess orange was the right color. You're probably looking at an impulse wave, whereas a corrective wave tends to maybe only go up a little bit, kind of like this, or like this, or maybe it'll just kind of meander around the middle. And so the same thing, you end up with a kind of a pie chart here that represents corrective waves. So when you have things in this area, you're probably looking at a corrective wave structure. If you have things in this area or this area, you're probably looking at a impulsive move. So I hope that's helpful just as a general, like, here's what I'm talking about. Okay, so let's go back to the chart. So if we're looking at this, then you can really just kind of see that this looks impulsive, this looks more corrective. And again, it's not an exact science, but if you're not sure what's coming next, like I don't know what's going to happen after this candle, the future, is a question mark. Well, this can help you out, because if we've been in an upward bullish move and then we get a corrective structure, what's very likely to happen next? A continuation of the previous move. And so even if you can't count the waves, if you don't know your wave counts yet, you don't know anything else, if nothing else, you've got that information to arm you. And this kind of thing happens within smaller degrees as well. And so in some ways it is good to know where you are in the bigger structure. In other ways it may not matter. For example, one of the things you can do, I just call it a skill that's kind of learned, and you can work with it. Corrective movements tend to slant slightly against the direction of the previous move. So if we've been in this bullish move, the correction tends to slant against it. It can be horizontal. It can slant up ever so slightly. A lot of that is when you're dealing with expanded flats or running flats. They will tilt this channel the opposite way. But most of the time you're going to see something like this, a move up with a slight angular move down. And so even if you can't count the waves, if we could, what are we looking at here? 1, 2, 3. 1, 2, 3. Yeah, I don't know. 1, 2, 3, and then something else, and then maybe 1, 2, 3. So maybe it's a double 3. But even if you don't know that, you can have a pretty good idea that once the price action gets out of this channel, it's more likely to go up. So you could wait for it to go up, and then you even could wait for it to go above this line. Actually, I like to do raise so I know where I'm drawing my line from. So then once price gets above this purple line, now you've identified a place that's a good potentially a good place to enter a trade. Knowing what's good, I'm going to put out another video that I did. I got to edit it where I actually followed one of my trades, and this is where knowing the bigger picture and knowing the smaller picture is really helpful. Let's see if we can try to figure out what's going on here. If we do a retracement measurement, this is not a zigzag, so it's probably a regular is what it looks like to me. So this looks like a regular flat, so then we can project where the other end should go, select regular flat. We've got this whole area, so we could potentially call this one of these two, ABC, which is going to be it's also good to know what you're going to be looking for, 335. So I would put it here and here. And so if I want to mark the lower waves, I would probably call this 1, 2, 3. Yeah, maybe we'll go with this. I'm not going to measure these lower waves, but 1, 2, 3, or I should say an ABC. This here is going to be maybe an A, B, C as well. And then the next one we're looking for is a 5, right? So it should be 3, 3, 5. So then we can go 1, 2, 3, 4, 5. So I would call that a good a good 3, 3, 5 wave count for a flat. So this pink move is a flat. Now, what's happening next? This is where it gets a little bit difficult. But I'm going to ignore that right now and just zone in on this green area right here. If we were following this and charting it as we go, and we're in the middle of this thing, we've already had a 3 and another 3, then the next thing should be a 5. Because even if it was a, let me go to my notes here. If it's a zigzag, it's a 5, 3, 5. If it's a flat, it's a 3, 3, 5. So either way, the middle one is a 3 and the last one is a 5, even if we've got our wave counting wrong. So we're expecting a 5 wave move, and so after we see this first 1, 2, now you're looking at it's like, okay, I am in a good position to take advantage of this wave 3. You could zoom in on a tighter time frame and see if this in fact is a zigzag, because wave 2s tend to be zigzags. Not all the time, but a lot of the time. So that's where knowing the different levels, like having a view of what's above you and what's potentially below the time frame you're looking at, is helpful. And number 2, the power of corrective waves. Again, because if I'm in this corrective wave, I know I'm in a corrective wave. I have already mapped out the first 2/3 of the corrective wave, and they match the measurements and everything, so I'm pretty confident of what's going to happen in the 3rd wave. Now, in the 3rd wave, since I'm expecting a 5 wave move, I know that that move is going to consist of a 1, 2, 3, 4, 5. And if I can identify that 2, again, I haven't zoomed in here, but I'm going to assume it's there. If I can zoom in like that video I showed you, we can zoom in there and watch this unfold, and then we can say, you know what, that is a zigzag, and then I can take advantage of this trade. And let's say we wait until after it passes 1. Somewhere in here we get in a trade. And how long do we stay in the trade? Because getting in is one thing, getting out is another thing, right? So you could set a stop loss, obviously, at the top of here. If it goes higher than that, then something else is going on. As it goes lower, you can watch for what you're expecting next, which is we're in a 3-wave move, and we would expect a wave 4 to happen next. After that wave 4 happens, then we're expecting a 5. How far that 5 goes, we don't know. So we might take some profit somewhere in here. Did we get the very top and the very bottom? No, but we got a very secure position in here in the middle. That's in this example, an 8.5%. So I hope that's helpful. It's just one of those things that I see when I look at the bigger picture and I'm not sure what's going on, seeing corrective moves really helps me. Now, is it 100%? No, sometimes I think I see a correction and I actually am seeing a turnaround. I'll say that last little part here is that, again, typically you have a move followed by a correction followed by another move. That's what you typically see. Now, if it's going to be a reversal, what you should see is a 3, 4, 5, and then a 1, 2, 3. And if you know what that looks like, that's also called a head and shoulders. Most reversals are head and shoulders. If you have a corrective move, then the next move should not be the opposite direction. Now, obviously, there's some caveats and there's some extreme situations. You've also got market manipulation. You've got news events. So obviously be aware of those. I'm not saying they don't ever happen. But with good risk management, putting in a stop loss at a reasonable place using Elliott wave theory, you can be much more successful. And then putting a take profit in. I'll show you one real quick just from a trade I did the other day that's going to be in a future video. Now, this one right here. And this one looks like a complete mess, right? If you look at all the stuff as you dive in, and I'm on the 5-minute. But I was pretty confident I had a wave 5, and then we went into some kind of movement. I wasn't sure, is this a 1-2 or was this an A-B? But I can't remember, some things gave me some confidence. Anyway, I charted out a leading diagonal, a zigzag. I think it was the zigzag that gave me a lot of confidence that I was looking at a wave 2. And so I entered a trade right here. My stop loss was just above here, because if it goes above that, then it's not a wave 2. And I wrote it down. Now, all of this, pretty sure this is a leading diagonal, but then it got really confusing after that, and it kept going down. And of course, I didn't see the future. You know, I'm looking at this, and somewhere in there, I started exiting my trade. I took some off the table, then I took some more off the table, and I took some more off the table, and I ended up having a really good trade. Now, price kept moving. So did I get the very top? I got pretty close, but the goal is not to get the very top. The goal is to have a winning average, and the winning average is here in the middle. It's not the very top and the very bottom every time. Because I'll tell you too, I also had a losing trade over here, because I saw this as a corrective structure, and I was expecting price to keep going down. I just, I think that's eventually what happened. You can see where I have wave 4 marked way over here. Things got a little weird, crazy. There's also all this Senate vote and House vote to reopen the government. I think that's what it was. Some news about reopening the government sent the market higher really quick, but it wasn't done with its wave 4, so it pushed it back down. That's what I think happened. But again, not saying this is a perfect system. This is just what I use, and I'm more successful than not. And that's the key to having a winning average. All right, if you've got any questions, let me know. I'll be glad to help out as much as I can.